That was the closing bell sponsored by Tastyworks. And taking a look at where we ended today, you can certainly see we lost some steam in the final couple minutes of trading. The Dow closing off just around 42 points. The biggest laggards in the Dow today, Chevron off just around 5%. Walmart and Goldman, both of those stocks off nearly 2%. Taking a look at the losses in Chevron, you can see that reflected in the broader energy sector. The XLE, like Ines was just telling us, off just around 5% today, off 17% for the week. NASDAQ off 4.5% for the week. S&P having its worst week that we have seen since at least January 2021. Well, let's talk about the moves that we've seen over the past 5 days and what we could expect going forward. We have Ann Berry, Threadneedle Ventures founder, and we also have Kevin Mahn, Hennion Walsh, Chief Investment Officer. And first to you, because we're trying to make sense of the volatility that we saw, the intense selling. We did see some buying action earlier today. What's your big takeaway from the massive losses that we saw this week?
Yeah, there's just no place to hide at this point. And that's actually really unusual. Normally, you'd expect to see certain sectors performing better than others, depending on what kind of down cycle you think you're in, and you're just not seeing it. Everything is down, and I think it's going to be that way for a while.
And Kevin, the same to you. Big picture, last 48 hours or so, your takeaway. You know it's bad when energy is down 5+% for the week.
I think investors are still trying to understand and grasp exactly how aggressive the Fed turned earlier this week. Not only did they raise by 75 basis points after telling you just 5 weeks earlier that raises above 50 basis points weren't even consideration, but they also raised the consensus for their year-end Fed funds target rate from 1.9 to 3.4%. They're going to be raising rates aggressively into a slowing economy that in all likelihood will be in a recession soon.
So given that we're in this period right now, and Anne, you said there really aren't any places to hide, how should people be positioning their portfolios right now? Is it better to hold on to cash, or is there something to start making your shopping list with?
Credit is something I'm starting to look at very aggressively. There are ETFs out there. There are publicly traded funds that help you find ways to try and find yield in very liquid instruments. Things like AAA, that's an example of an ETF. There are others out there. So rather than just holding cash and having it in the bank account, that's the kind of place I'm looking to try and wait this out right now.
Kevin, what do you think? Where are you seeing opportunity?
Well, investors can't reinvest for what's already happened in 2022, but what they can do is invest for the balance of this year and into next year as well. We did a couple research studies here at Smart Trust, and what we found is that during periods of rising rates, certain sectors tend to outperform. We then mixed in slowing economic environments that lead into recessions. Two sectors jumped off the screens that came across in both of those studies, those sectors being industrials and, believe it or not, information technology. If you factor in an ultimate recession, then you add utilities. So investors are looking to position themselves for the next 1, 2 to 3 years. You may want to look at quality companies that pay dividends and are associated with those sectors.
And what do you think of that? Information technology and industrials, are those built to sustain the next 12 to 18 months?
Well, I think industrials is one, and I think it really depends on how capital intensive those businesses are. So if you look at the industrial companies who need to spend a lot on machinery and equipment and real estate, rising rates are pretty tough for those businesses. So it depends on the capital intensity. Information technology, not all of these businesses are created equal. And I think one of the things Kevin said that was key, it's cash. Which of those businesses are generating cash? That's what I'm looking out for.
And Kevin, I want to ask you about, obviously, the crypto sell-off. We saw a lot of large institutional investors in this space. What's your take on whether it's worth having crypto in your portfolio right now?
I'm not a large or a small crypto investor. In fact, I can't put my arms around valuation. I couldn't tell you why it rose as much as it did, nor can I tell you now why it's fallen as much as it has. What I can tell you, though, in terms of one area of information technology, which I do think is transformative, and which has sold off significantly, is blockchain. That underlying technology that cryptocurrency is based upon can also be found in other industries such as healthcare and financial services. So that's one area to potentially consider. And despite this significant sell-off we've seen thus far in 2022, there are many attractive valuations for different companies across many sectors. And here's one statistic that I'm going to give all of your watchers today, and that's the Altman Z statistic. That was developed back in 1968 by an NYU professor to help predict the probability of a company declaring bankruptcy over the next 2 years. Wow, isn't that appropriate for right now? So if you can find those companies that have good, strong balance sheets, cash on their balance sheets, pay a dividend, and an Altman Z statistics is below 3, that should help you navigate through what's likely to be some difficult economic times in the months ahead.
Speaking of the difficult times here, even over the next couple of weeks, and there's been lots of talk about PCE, there's been lots of talk about earnings, but we have a few weeks until we get PCE, and then, of course, until earnings season gets underway. What should investors be watching or focusing on until then?
Well, the frustration is right now we feel like we're flying blind to exactly. We're in this sort of information black hole period. I think it's looking internationally, actually. I don't think we talk enough about looking overseas. The UK right now, I think, is in technical recession. It's had 2 straight quarters of decline. Looking at the Chinese situation with continued lockdowns and seeing what Europe has to say about the impact of the Ukraine on their GDP growth. Until we have domestic data ready here, looking overseas to see what's going on, I think is important.
Yeah, Kevin, what about that? You got the news from the ECB and the Swiss bank, and it looks like situations are quickly worsening across Europe. Are they headed towards a recession, and what's the implication on our economy?
It's an excellent question. And inflation isn't just a U.S. problem. It's a global problem right now. And other central banks are trying to thread their own needles with respect to trying to dampen inflation without killing economic growth entirely. We saw just the other day the Swiss National Bank raise interest rates by 50 basis points and also indicate that they may look to start selling U.S. equities off their balance sheet. That happened around 4 o'clock in the morning the other day, and that's when we saw the future markets turn quite considerably. So I do think this is a problem that's shared across the entire globe. But again, that has created opportunities for investors to consider. And I agree with Ann, having some degree of international equities in a globally diversified portfolio should position investors very well coming out of what's likely to be a global recession over the course of the next year.
And speaking of that, Anne, obviously we saw the Conference Board come out with their data showing that 60% of CEOs expect a recession, 15% believe we're already in a recession. How do you think that is going to shape things like earnings going forward?
One of the issues with expectations is they can become self-fulfilling. And actually, if you look at the Fed, they were concerned about the issue that inflation expectations were becoming self-fulfilling. I think we're going to see that too. If CEOs are not confident, they're going to cut back on hiring, they're going to cut back on capital investment, they're going to cut back on marketing spend and other areas that typically get cut during recessionary periods. So I think the issue here is needing to see from the business community that there is a belief that there's a light at the end of the tunnel relatively quickly.
Okay, Ann Barry, great to have you in studio. Kevin, when are you going to come hang out?
Invite me and I'll be there.
Okay, buddy. We'll see you soon. Enjoy the weekend.
Have a great weekend, everybody.
Okay, you too.